I invited Shannon Cole to this channel. She is a preferred lender and we're excited to have her. She's going to be answering a lot of your questions, and feel free to contact her after this discussion. Shannon, thank you so much for being here. Maybe introduce yourself first before I start asking questions.
Absolutely. Thanks for having me, Katrin. Hi, everyone. I'm Shannon Cole. I'm a loan officer with GuaranteedRate Affinity here in the Sarasota area, and I have been helping homeowners in this area for over 25 years. I'd love to answer your questions, hopefully help you, and ask away.
What are the different mortgage types? So I know there's 4, but can you talk to us about the differences just in general?
Absolutely. Absolutely. I'm just going to start and say you do not need to have this huge down payment to buy a home. You have conventional loans, which are very popular, 3, 5, 10, 15, 20% down for conventional loans. And for any type of residential property, that would be your primary vacation home or an investment purchase. Then we have FHA, which is a government loan, not just for first-time home buyers, but it is for primary home purchases only. And you only have to put 3.5% down. And FHA tends to be a little more forgiving sometimes on the credit score requirements and some of the income requirements. So that's always a great option. And then there's VA, which of course is for our current active duty and veteran families, which you can finance up to 100% of the purchase price, no mortgage insurance, and really the easiest loans I think that are on the market right now. So that's a great option. And then we don't see very often in the Sarasota market because we've grown so much, but then there's also USDA still available in some areas that are considered more rural. And that also allows you to qualify for 100% financing. Primary home only. You don't have to be necessarily a first-time home buyer, but there are income limits and restrictions as far as owning other real estate, but that could be an option as well.
Now, what is predominantly the mortgage loan type that you work with?
Yeah, in this area, say 80% is going to be your conventional loans, and the other 20% will be between the FHA and the VA loans. As I said, we really don't have an opportunity for USDA just because there aren't as many eligible areas to offer those loans.
Okay, so a lot of buyers are very intimidated by the process. Can you help them understand kind of what the first 2 or 3 steps are and how they can prepare for it?
Absolutely, absolutely. There's a lot of questions and answers, but please know that whoever you are talking to, we'll start, and we can start the conversation, start asking the questions that we need to go down that path with you. But, you know, my initial conversation with anybody is I want to know what their intentions are. What is the loan for? Primary home, vacation home, investment property. And then there's spin-off questions from there. But then I'm primarily going to want to know where your income has been coming from for the last 2 years and kind of get an idea if it's going to be continuing that way. What money is being used for the down payment and closing costs. Really big issue. You've got to be really upfront exactly where the funds are coming from. Is it a gift from mom and dad? Are you liquidating some stocks and bonds? Are you taking a 401k loan? We really need to know so we can tell you and guide you on the proper documentation. And then however you want to apply, most of my customers do apply online. That allows me to also, on our second follow-up call, I've reviewed their credit report. So we know there's no errors that need to be corrected maybe on your behalf or any red flags that we need to address. So we can make sure you get your loan approved.
Let's just assume that I'm one of those home buyers and I'm calling you now, but I want to be prepped for this initial conversation. What paperwork can I, gather together so that I'm a little bit more efficient going into this?
I love it. If you are currently employed, if you could have a recent pay stub nearby so I can ask some questions about how you're paid in your employment, or a W-2 or a tax return will also work. Other than that, most of the questions I'm going to ask how long you've lived where. Do you own or rent? I'm going to ask if you rent, what is your monthly rent? If you own, is there a mortgage? What is your mortgage payment? I'm going to look at your credit report, but I'll also ask questions, such as, do you have an installment agreement with the IRS? Maybe you owed a lot of money on your taxes last year and couldn't pay it all at once, so you're in an agreement. I'm going to want to ask about the terms of those payments. If you're obligated to pay anybody child support, alimony, or separate maintenance, those are things that are liabilities that are included when we're calculating your income that wouldn't necessarily show up on a credit report. That's it. I'm going back 2 years on where you've lived and worked, and debts. and where the money's coming from to purchase your home.
You want to make sure that they can afford buying a home, right?
Correct.
Not just from the standpoint of ensuring that the loan gets paid off, but you also want to make sure that potential buyers are not over their heads. So that makes sense to be very thorough in kind of that background check, so to speak. How does a potential buyer even know if they're going to be qualified to get a loan?
It's taking that initial step to either reach out and call myself or another licensed loan professional, and then take that step to share that information, allow them to pull a mortgage credit report to make sure you fit within the guidelines of the program that you're qualified for. It's really that simple. Just picking up the phone, call, email, or text somebody and get the process started. Credit score is very important, along with the content of the credit report. And depending on the program that you are applying for example, government loan programs, FHA and VA, tend to be a little more forgiving on those that have lower credit scores, where conventional loans, you can still have a lower credit score, maybe in the lower to mid 600s, and still qualify and get approved for the loan, but the interest rate is much higher. So it's just worth having your credit report pulled with a mortgage professional. It's a mortgage credit report. It's going to be different scores than when you're doing your Credit Karma or CreditWise and checking your own. So just don't bank on that. Continue to review your credit on those apps to make sure there's nothing erroneous or negative showing up. But as far as getting your score and history, a mortgage professional should do that with you.
Now, there's some confusion in terms of pre-approvals and pre-qualification. Can you tell us about the differences?
Sure. A pre-qualification basically does not include having your credit report run. It is sharing your income and credit and what you think your credit is and your liabilities and assets with a mortgage professional. And they may look at your pay stub and review your bank statements, but it's not a full initial application for a pre-approval. So hence the pre-approval goes that one extra step, and there is a mortgage credit report pulled and looked at along with the income and asset documentation to make sure there's no surprises, that your application fits the parameter of the loan that you are going to need.
Right. And then there's an additional step to this, which is actually getting pre-underwritten. What are the benefits of doing that?
Correct. Oh my gosh, there's so many benefits. At GuaranteedRate Affinity, we call that our power bid approval. So that is taking it one step after I meet with a customer and I've reviewed their online application and the initial income documents, and I gather all documents that I know will be needed for an approval, and we send everything to one of our underwriters who reviews everything and issues a commitment to lend pre-approval, this power bid approval. And it says that you are approved subject to finding a home. So all we need now is your contract, an appraisal if one's needed, title work and insurance, and your closing, because everything else we've already addressed and approved.
So it speeds up the entire process and also makes a stronger offer.
It does. It absolutely does. We can close quicker and it makes a stronger offer. And we have that available for any of the loan programs we're talking about, the conventional or FHA or VA. We're happy to do that for anybody before they start shopping.
Right. Now, closing costs here in Florida can be about 3 to 4% of the purchase price, estimated wise. How do you account for that in the pre-approval process? And then how is it baked into the mortgage payment?
Well, the closing costs will need to be paid at closing by either the buyer or the seller within the allowable limits. So we do factor in the estimated closing costs because it factors into, wow, how much are you going to need to close, your down payment and all your closing costs. So that's factored in for the pre-approval portion. What is included in most mortgage payments are the principal and interest on the loan, estimated, your homeowner's insurance is escrowed, your property taxes are escrowed. What is included for qualifying you in your payment is if you're in an area that has a homeowner association, we'll factor that monthly payment to qualify and approve you, but you will always pay your homeowner association directly to the management company or the association. It will never be included in your mortgage payment.
Okay, so those are additional charges that potential buyers are going to have to think about when purchasing a home.
Correct. And so what should happen with any pre-approval or even a pre-qualification, but hopefully a pre-approval because it's much stronger, guys, is you'll have your pre-approval letter issued by your lender, by GuaranteedRate Affinity, and then there'll be a separate document, which we call it a loan summary. Some lenders call it cash to closes or their initial loan estimate, although that's typically not official until you select a property, but it's a detailed line by line breakdown of those costs that are typical that you will see at closing. So it'll give you, I'll call it the meat and potatoes. What is the monthly payment going to look like with taxes and insurance, everything included? And how much money total are you going to need that includes the down payment and those closing costs?
One last question, and that is, are there any special incentives right now for first-time home buyers in Florida?
Yeah, in Florida, yes. My goodness, we have the Hometown Hero program that the state of Florida put out. It is for first-time home buyers defined as not owning any real estate in the last 3 years. That it includes being untitled to any other property. The exception to that first-time home buyer rule is for our veterans. You don't have to be a first-time home buyer, but it's for a primary home purchase. And if you qualify, I think there's 100 different professions. They're mostly municipal and healthcare worker professions. If you are employed full-time in one of those professions and you qualify otherwise, you can get up to a 5% of your loan amount in down payment assistance with a maximum of $25,000 to go towards down payment and closing costs. And it's set up as a silent second mortgage that you would repay if you ever sold your home or it wasn't your primary home. But it's great. $25,000 help with closing costs and down payment to get you a new home.
I'll take it.
Yeah, right? It's awesome.
Yeah, excellent. Shannon, thank you so much for being here today and really helping address some of the major questions that buyers have. Of course, anybody out there who has any additional questions, call Shannon. She'll be.
I'd love to help. Call me, text me, email
I'm
me.
happy to help you. Information is going to be in the description section for Shannon, contact information, and her website. Shannon, thank you again. I hope to see you soon on my channel once again.
I hope to be back, and thank you for having me. Bye, everybody.